Hello traders, it's Samurai Trader here. Another fantastic day trading the NQ and the ES. So I'm going to be recapping some trading opportunities. This will be very relevant to my members, and also I'm going to make this a general public recording as well. Now for my members watching this, I'll be doing a more detailed breakdown of a lot of these setups and in the members recording, which I'll also be posting this morning on the drive, so you'll be able to go on there very shortly and see this, or see the let me get this right, the detailed members video. If you're new to my channel, you'll see that I have to, by law, put the disclaimer up every time I do a recording, so please feel free, if you need to stop the recording and just to read the disclaimer. All of the setups that I cover here today are all comprehensively covered in a Day Traders Fast Track program, which is the world's most comprehensive program for day and swing traders. So please go to my website to gain more information about the Day Traders Fast Track program, and subscribe to my channel, of course, so you can be kept up to date with all of my latest recordings and training videos. So let's get into it, traders. I want to show you a couple of slides, and we'll go directly to the charts. First of all, what is absolutely critical for you to succeed as a trader, you must have a compelling future. You know, they say if you've got a compelling future, you can move mountains, and it's just so important that you have a really good a set of goals. You've got a vision board, you've got all of that. That is absolutely critical to succeed as a trader. Now we know that over 70% of the Day Traders Fast Track members are experienced traders, and many have come to me after losing 2 or 3 accounts. And one of the things I really want to emphasize, you've got to have a compelling future. Look at the past as a learning experience. It's now a time, if you like, to turn over a new leaf and to approach it with the zeal of a crusader, because you can learn this. You can, but you need to be willing to put the time in and create this compelling future. Now, very quickly, if you start off with a $5,000 capital and you're earning just $200 a day, just $200 a day, that's 4-5 tick trades on the ES, or that's 3-6 tick trades on the ES. That's a little over $200. And every time you double your money, that is, you're earning $1,000 a week, you buy another contract. You can see by 25 weeks, at the 25-week level, you're earning $52,000 a week, if you're that way inclined. Now I do have to say this, traders, is the psychological pressure when you're got such a large risk, for an example, at that level. All right, there's very few traders at that level. However, to be earning 5, 10, 15,000 a week is very realistic, and most traders can handle that. For an example, at week 10, you've got you're earning $3,000 a week, you're trading 4 contracts. That's you know, a great income, 3,000 to 4,000 a week at that sort of level. That is a reality. And of course, the younger traders, and I say that no insult, hey, I'm 56, okay guys, and ladies, I should say, that, you know, when we get to our middle age, we're going to be more conservative. You know, if you're earning 10 to 20 grand, that gives you a really comfortable lifestyle. Some of the younger traders may want to be earning their 40, 50, 100, 200,000 a week. Well, that is the possibility as a trader. Okay, that, you know, starting to look at this, it can help you create that compelling future, which is really important. Now I saw this little picture, and sorry it's a bit blurry there. You can't deposit excuses. I love this one. Traders, I'm dealing with traders every day of the week, 7 days a week. Seriously, I receive emails, Skype meetings, I do private coaching, etc. You can't deposit excuses. Stop coming up with the excuses why you can't do it. Stay in sim. If it takes you 3 or 4 months, you know, take your comprehensive notes. You can do it, but don't give me excuses, and don't give yourself excuses. Don't short-change yourself. You can master this art after a period of time. All right, off my high horse, let's get into this. Now in today's session, I'm going to be showing you the power of using the higher time frame, and once again executing on your EC chart, that is your entry chart. Now what's really important here is, of course, when I teach you the setups in the Day Traders Fast Track program, there are now probably about 14 different setups or strategies that we have, remembering you only need 3 or 4 of these. So you want to become a specialist. That's really important. As you gain time or gain experience over time, of course you can expand that, and in the end you'll probably be including virtually every setup we have, but you don't have to learn them all at once. So once again, sit back, relax. You're not going to be swamped. Take your time, and that's one of the biggest challenges, is traders not giving themselves enough time to master this art, but it can be mastered in time. So what's really important is this point here. If the higher time frame and the EC signals, the entry chart signals, are at odds, pass on the trade, remembering you only need 3 to 4 net trades a day to become very wealthy and financially secure for life. So that's the biggest challenge for traders, is sitting on their hands and waiting for those trades. Now, as you all know, or all my members know, that I have this posted on my wall above my screens here. I'm patient, I'm disciplined, I'm focused, I'm a sniper. One shot, one kill. I'm a rules-based pattern trader. That is, I'm looking for patterns. Patterns make it very easy for us to pick up in the market. So that's the big thing, is to develop that patience that you need. So the trades I'm going to be talking about today are scalping trades. So typically scalping is what we call a volatility trade, and all of my members know this, and for the general public, I'm only after typically 4 to 6 ticks on the ES and 10 to 14 ticks on the NQ. So I'm in and out. Now I prefer that because that works well for my style. Now some of you might like to trade higher time frame charts and to be in longer, go for a higher profit target. Well, look, I like to buy dips, sell rallies, and so that just works for me personally. So once again, if you look at these, and say if you're looking at my charts for the first time, you might say, well, what am I getting in and out on a regular basis for? Well, that works for me, because once you get a pullback, I can always re-enter, and with brokerage, around the $4 mark, it's peanuts to get back in again. That's what works. So sorry, what was this one thing I wanted to show? Okay, so the big thing is, are my EMAs trending? Are they fanning? So my members know what that means, and do the 8, 21, 34 EMAs confirm the higher time on the higher time frame? Confirm. So let's go and have a look now at some trading opportunities. Now once again, traders, this will work with your trade. We've got a lot of stock traders now, a lot of traders that are using options, so looking at the stocks. These setups work once again on every market. Now what I might change at various times, of course, here I've got a range candle here. This is a full range, which means each one of these candles is worth $20. My members know I like the 133 tick, but it comes down to personal preferences. It doesn't matter a whole lot. You could use Renko here if you wished. So the important thing is, though, is the trade setups themselves. So what I've got here is an NQ1 range, and this is from today's price action. This is around 8:50 a.m. Chicago time. So traders, for my members, we've got a nice T20 there. Now what I wanted to show you here was this on the right hand side is my higher time frame. Now I like to have the higher time frame on, it's above my screen. When I look at the higher time frame, it's above my upper screen, but here if you're running with one screen, you can see here it fits mighty fine. Okay, so, and you can see here this line here is plotting over here. So we've got prices accelerated here for what we call our T3 or our T89, just there, and we can see that is this here. So where we've got this happening right there, as long as I've got it's a nice engulfing candle, you got price separating, that is a really nice T3 setting up. We then have our T20, and away we go. You've got a T25, you've got another pullback for a T25. If I look back down here at my lower chart here at my stochastics, we can see here I've got a T10, a T2, a T2, technically a T2, but notice the angulation of how far you're moving away from your EMAs. Yeah, but what I do want to show you is that notice that here I'm fairly well keeping what I call my charts clean. All I've got here is my EMAs pardon me, stochastic on the bottom, and my floor pivots. I don't have anything there looking for divergence, because traders, what I want to teach you is, you've got all the information here is what you need. Give me the pivots, give me the EMAs, and that's all I really need. Okay, because we can trade pure price action with our 8, our 21, our 34, our 89, and our 200, and combine with the higher time frame. So let's have a look at this chart here. So we can see we've got a pullback here, and we can see it here. We've got a bounce on our 200, so a nice full candle, and this trade went nowhere. You've got actually a T3 set up, and you would have been stopped on this trade. Now you do have angulation, and hey, you're not going to get them all. We then had a nice T25, T2, that would have been a nice winner for you, and you've got one over here which is a 34B. So let's keep moving on, and what I wanted to show you here is this. Let me just get these here, is looking at the candle formation. Okay, on my higher time frame, what direction are my EMAs in? Okay, they're in a definite downtrend, which tells me what? Trade to the short side. Now, to be conservative, if you want to wait for your candles on your higher time frame here, this particular candle here confirmed there for us. That is, you want the candles on your higher time frame to be in the direction of your entry chart, of course. So if you like, everything is confirming, they're all working together. So let's just scroll along a little more here. Okay, we can see here we punched straight through the pivot, but you can see here we had a little bit of pressure here. Let me just come along here for you. Let me just move this along. So on the right hand side there we can see the high time frame. There we can see here price accelerated right away, get right away from our weight. Look at that angulation. Okay, look at our then down here on our entry chart, we had a fantastic T3. No doubt we would have had divergence. So let me just mark this up here, and if you wanted to be conservative, waiting to here or even over here, look at that there. You had a beautiful T3 which followed through. Now traders, be very wary in trading against T3. When you have a mean reversion trade, that is where price action has moved well away from the EMAs, usually it means we'll get an overcorrection to the upside or to the downside. Of course, quite often it's a change in market direction, at least for the short term. So you'll see these accelerate away, and look at that. Look at our 200. Look at this big gap. So remember, mean reversion means, or reversion of a mean, we're going to fling back the other way, which is exactly what happened. So we can see here our long term has gone up. You had a T10, a T2, you got a T25 there. So you got multiple, and of course a T20. Now traders, remember with the T20s, if prices move too far away from your EMAs, wait for a pullback and a bounce on the EMAs. There is your re-entry at T20-1. So let's move right along here. This is the stack of trades today. What I wanted to show you was this here, and let me just get this right on my high time frame. Okay, now technically you could say, okay, do we take this as a 200 EMA bounce? We can see here all of our EMAs are in a heading up, and virtually we've got a T7 set up here. And for the general public, these are codes that we use. It just makes it easy to communicate with the different types of setups, but you get cheat sheets on all of the key setups, and of course there's comprehensive training, so you learn all of these setups very quickly. And if you look over to your higher time frame, so let's have a look at this here. Look at this here. Look at the acceleration of the 8. The 34 is rolled, the 21 is up. To go against that, you're trading against all of these EMAs and all of these. Now we do know some of these occasionally do follow through. My long-term stochastic is overbought, Okay, so you can just see here the risk of taking this trade. It just pays you to sit aside, and sure enough it failed, and you had then a nice 34B, 2134B. So as you can see, traders, we had multiple trading opportunities. Now what I do want to show you here, okay, 225. Now you would have been stopped on this trade, and let me just show you this over here. I want to just point this out on the high time frame. You can see that right there. Notice how prices accelerated away from the 8 EMA. Now remember, you're going to get a pullback at some time. Now here you would have been stopped, and remember, the more trades in a trend, the greater the chances for a pullback or a decent pullback. And that was a question that was asked by a member, and sorry, I just don't have the notes in front of me, the emails in front of me, but remember, the more trades in a trend, the more likely the pullback. However, when you've got a 45-degree angle and you can see the market moving, you've just got to keep rolling the dice, because remember, where is price probably targeting? Your next pivot level. Okay, so we can see here we're right there. Where is the trade most likely to go? Up to at least this level. So that is why you always want to know where your pivots are. If we're in a downtrend, I want to know where my lower pivot is, and the uptrend, of course, I want to know where my upper pivot is. Okay, so up we go. So you would have been stopped on that one. Very easy. Remember, you're not going to get them all, but you've just had about 5 or 6 winning trades in a row. You got stopped on that one. Then these are just plain vanilla entries. One here, one here. Now we get up to the top here. So what have we got? So we've punched through, and let's just have a look at this. Here is a potential. Let me just show you this here, traders. This is a potential T3. Look how price has accelerated through. I'm still very overbought on my long-term stochastic. Now some of you may have taken this trade. If you did take this counter trend trade, you would have been stopped on that one. If we look over here, you've virtually got a pivot bounce here on the higher time frame. It's come back. Everything still is really accelerating. Now this is something I've mentioned in videos in the past. Here's what you want to be very careful of is, remember, you want to make sure that if the market is accelerating away, and let me just draw this trend line here, let me do a parallel. Just want to show you this. Here we go, and what I'm going to have to do is just turn this off. This is something you want to be really cautious of. Okay, here we've got it here, and let's just go back here. Traders, remember I talk about angulation. If you're going to take a counter trend trade, you really ideally you want to see price moving well out. Now remember, with channel bounces, and let's have a look here, all I've done is simply taken the fractal points there and drawn it there. That's gone through, done a parallel, and look at this. See our price action is bouncing between the channel. Now finally we get up the top here at this pivot level, we bounce again. Where would be the logical place for that to come, that bounce to? Let me just extend that right. My most logical point is for this to bounce down to here. Eventually it does. So up here you could short the market, okay, as you could short it here, but what you got to remember here is that you don't have very far to go. Okay, that is, you want to have very tight targets, because there's a very good chance you're going to bounce at this channel. Didn't quite hit it, it then continued. Okay, you could have your target up here at the of course your upper channel. We then get a bounce. This also happens to be a T3, so let me just show you this on the higher time frame. And to do that, traders, I need to just go back to pointer tracking, back to global, and let me just show you this. Let me just get it so you can see it. Sorry, just up the top here. Okay, so we can see we've punched through the pivot. We're at the upper channel, and look at this here. See how price has accelerated away from the 8. You could short there. Now where is your logical stop? Well, I always recommend, as you know, we put our stop 2 ticks above our swing high. So our stop would be there, stop would be there, it's going to be above here. So we've come down, we've had a pivot bounce. Okay, you can see here we've come down. You've now got a T7 set up. Your stop, of course, is 2 ticks above there. This ticks up 1 tick above, so you're kept in the trade. And let me just show you this. Over here on your higher time frame, you had a T7 as well. So you've got a T7 here on your entry chart, you've got a T7 on your higher time frame, and away you go. Okay, and then of course we had a T20, and you can see here then the channel is broken. But what I'd really recommend is you really get used to drawing in your channels. Now you may be thinking, do I have enough time? Or remembering, if you're focusing just on trend trades for an example, or the major or bounces off the channel, you've got plenty of time to draw these. And remember, this is over a period of what, this is over from down here about half an hour. Now I will point out, this here was from the market open. Now I always recommend, when the market first opens at 9:30 here, the first 15 minutes can be what I call the killing fields. you can twist and turn very quickly. So I recommend be very cautious in trading the first 15 minutes of the market open. So anyway, if you had been in here, we've got a nice turn around the 10 a.m. turning point up here anyway. So you've come down. Now here, what have we got here? Over here you can see we had a T3 and a 34B on the higher time frame. You got a lovely entry here. Notice the angulation as well, and so there is a really nice entry. Now notice they have a bubble formation here. You've gone down, and notice how my long-term stochastic is oversold here. So we've gone down, nice counter trend trade. We've got it here on the higher time frame. Now what I wanted to show you was this. What about this for a short? Be very careful in trading against T3s, because remember, they quite often go up and you know, they'll react a little. Now so you can see here it's gone up, little pullback, gone up again, failed, then it's come down. Just be careful of the first trade entry you get against T3s, T89s, divergence trades, etc. Many of these fail. And even if you look down here, you had one here, even though it still would have delivered, you would have still picked up 10 ticks out of that. It did fail not long after. Now here we ended up getting a nice T7. Now what I wanted to point out is, notice the candle here for an entry here. If you look at this here, the entry candles over on your higher time frame, the 8 EMA had turned up. All of the candles were pointing up to go towards the pivot. So in other words, if you had have taken this, the higher time frame was actually against you at that stage. Okay, this is where you want to be really patient. Now then, if you had have given that one a miss, if you had have taken it, by the way, you would have been stopped. But look over here on the higher time frame, we come over here another couple more candles, and let me just perhaps move this over a bit more for you. So there we're in, we'd already had one reversal candle. Now we've got an engulfing candle. Okay, this is a really good entry. Reversal, you've had a T20. This is your first pullback after your T20. It's now going in the direction where this one, look at these, this was against this trade, you would have been stopped. Now we've got our entry. Okay, this is where the higher time frame can really be powerful for you, and I haven't been emphasizing this. And once again, patient trader, this is really I suppose was prompted me into making sure I show more of these. Now down here we've got an 89B, and what's interesting here, let me just show you this on the higher time frame. We actually, on the higher time frame, you've got an 89B, so you've got, sorry, a 200B on the entry chart, 89 on the higher, and away we go. So traders, we're up to nearly 24 minutes on this, so I don't want to keep going. Let's just quickly scroll along here. Okay, you're stopped on one down here, but you had 4 or 5 winners before then. All right, you got a nice 225 there. You can see there, traders. Now here you've got, look at this here. You actually, I can tell you now, without it, you would have had divergence on this, but notice price action gapping away from our higher time frame. Now these aren't exactly in sync. Now this is a 377 tick, this is a range. I don't like using the range candles for my higher time frame, personal preference. Okay, so I've still got a 377 tick. For me, it just I just find it works well. But once again, you've got to do some testing for yourself. Always verify. So here you've got a nice T3 on the high time frame, not really a T3 here, but you did, or you would have had divergence. You then got of course your T20. And traders, here's your first pullback. And once again, if you get a T20 and your entry is too far down, because there it is there actually, if you're too far away, wait for your first pullback. Okay, profit taking, pull back, then you enter. Okay, so let's just scroll along. We're still Thursday morning, Friday morning. Let's just quickly scroll along. Okay, so you've got lots of trades coming down here. Once again, let me just scroll along here. Look at this on my high time frame, or the EMAs, let me get this right, sorry, heading down. What have I got here? I've got a T3 bounce on the 200, separation here, T3 on the entry. Let's put the farm on it, only joking. Okay, and then we go up. Now what have I said about the first trade after a T3 or a T89? Extreme caution, and here it is here. We've got our classic 34B. You would have been in, remember, only down here. You close under your 8, and of course it bounced against you. So this is what I mean. Be very careful, very cautious in trading against these mean reversion trades. All right, then you got your of course you've got a T20 here, up, T21, T25, and what have we got here? Over here we've got our classic, okay, T3 again. Look at the higher time frame, we've accelerated right away, closed under my 8, we're in. So what are we up to? We're up to about 1 o'clock. Traders, I'll actually recap the ES on a separate video because we're just going to run out of time. We're nearly up to 30 minutes. So once again, here you've gone up, here it is there again. Okay, T3 went up there, trade against it, it would have failed. That's what I mean. You've got to really watch these. And if we look at our higher time frame, let me just get across here a little bit so you can see it. Over here, there it is there. Okay, bounce on the 200, and away we go. All right, then you're getting some bounces around the pivot, your classic pullback 34B, 89 200B. You go up here, we've got then our classic T3 again. So traders, as you can see here, there was just so many trades there. And you know, traders sometimes say to me, why do I have so many strategies and so many setups? Well, 12 to 14 different setups or strategies, and a lot of these will confirm at the same time. Sometimes you'll have 2 or 3 will confirm at the same time. But just as a carpenter has a range of tools, or a mechanic a range of tools for doing a job, as traders we need to have a range of strategies and setups for different market conditions. But what is really important here, traders, is that virtually every one of these setups are patterns, geometric patterns that appear in the market, on every market, every time frame. Now remembering what happens on our higher time frame, the patterns and even the candlestick formations are more reliable than the lower time frame, because on the lower time frame you're going to have a lot more noise than what you do on your higher time frame. However, remembering we always use the entry chart for our main signals. That's really important. So for those that are once again new to my channel, please subscribe to my channel, go to my site, get more information, obtain more information on the Day Traders Fast Track program. $197, the best investment you'll ever make. And wait until you see the new website that's about to come out and the members area. It's incredible. So traders, thank you very much, and I'm going to go and do an ES recap now as well. So I'll post that in the general public area as well, on the general area on YouTube I should say. Thank you traders, see you on the next video.